All right. Good afternoon, Simpler Fam. I hope you're doing well on this fine Friday, March 21st. Thank you, Mirza. Appreciate you. Hope you have had a great week trading, guys. This market has not been easy. I don't think trading is ever easy, but I do believe it's been a little more difficult than usual. Hi, Anna Marie. Good to see you. David, good to see you both. Yeah, so I want to talk to you about a very important part of your trading journey, and one that I don't believe we spend enough time talking about, honestly. That is the psychology behind trading. Um, you know, you can have the best plan, you can uh, do all of your homework and learn everything there is to learn about price action in the market. Heck, you can have a degree in finance, everything. But if you don't get trading psychology right, I don't believe you will have long term success. That is how important having the right mindset is to your trading success or failure. So let's get started. What is trading psychology? It's the study of how psychological factors impact your trading decisions and performance. When we understand how mental biases and emotional influences affect us, we can improve our trading outcomes. Emotional discipline. That means controlling your emotions and sticking to a trading plan. What is cognitive biases? Some common biases are overconfidence, right? That exuberant feeling you feel when you are in a winning trade or you've had several winning trades in a row, we become a little overconfident. Another common cognitive bias is loss aversion. That's another word for fear, fear of losing money. The only thing you can be guaranteed in trading is that you will have losers. You will have trades that don't work. That is a guarantee in trading. So, loss aversion, the fear of losing money on a trade, is a cognitive bias. Another cognitive bias is confirmation bias. Decision making, how stress and anxiety affect your trading choices. I'm sure if you've been trading for any length of time, y'all have heard of Mark Douglas and his trading in the zone. What is the zone? It's achieving a state of mental clarity and focus in trading. You have confidence, clarity, and relaxation. I don't know anybody who doesn't think that that zone, quotes, sounds nice to be in a trade, still have your confidence, your clarity, and you're relaxed. Now, how do we achieve the zone? Number one, we must understand our risk tolerance and we must set an allocation per trade that matches that tolerance. We must overcome our cognitive biases and we need to have a trading plan and stick to that trading plan. I'm going to first talk about risk because risk is the most important part to get right. What is risk? Risk is any trade that you take The amount of money that you have in that trade, the amount of money that you have paid for, whether it is equity, futures, or options, every single type of trade comes with inherent risk. And that is the price that you paid to get into that trade. Look, we never enter a trade with the thought that I'm going to let this trade go to zero, right? Most of us enter a trade thinking of how much we're going to win, right? Not how much we're going to lose if this trade goes to zero. The reality is there are times that a trade can go to zero. And that's why your allocation for each trade is so important. You also need to look at the risk versus the reward of each trade. Are you happy with it? If I am talking about myself and I'm looking at the risk to reward on a trade, I might say that I'm going to risk $300 to make $300. And I might be happy with that. But you might say, there's no way I'm going to risk $300 just to make $300. You might say, I will risk 300 to make at least 600. So your risk to reward that you're happy with is 2 to 1. It's not what other people's risk to reward ratio is important. It's what is your risk to reward ratio. And guess what? For me, that changes according to the behavior of the market. What do I mean? In a choppy market like we're seeing right now, my risk to reward might be $100, and I'm happy with that. If we're in a trending market, my risk to reward might be I'm going to risk 1 to make 3. It it changes with the market environment that we're in. But the important thing is, are you happy with the risk to reward on each trade that you enter? How do you figure out what the risk is? You take the price that you entered the trade and you subtract where your stop is, what your stop price is. That amount equals the risk in the trade. All right. The reward, how do you figure that? What's the price at your target? Subtract the price you entered the trade. That is your reward. You must accept the risk before you enter any trade. That is very, very important. And all the best laid out plans and stop prices, especially if you're swing trading, any trade that you carry overnight, you're carrying that risk overnight. Guess what? You might wake up the next day, the next trading day, and the price is so far below your stop price that your position is worth zero. Okay? You have to keep that in mind. We want to think about the loss before we think about the win when taking any trade, right? I think I've driven, sorry, that point home. Understanding that every trade could result in a loss does not come naturally to all traders. I've already said that. Most of us, when looking at a trade setup, our first thought is, how much money am I going to make? I want you, I want to challenge you to first consider, how much money could I lose? And the answer to that question is whatever you paid to get in the trade. Okay? Mark Douglas says, when you genuinely accept the risk, you will be at peace with any outcome. Look, I have a trade on right now, semiconductor trade to the upside based on a weekly chart. I've been in this trade for several weeks. It is not performing well. And today, today, because it's a weekly trade, I commit to a weekly candle close. I might take a loss on this trade. And guess what? I don't care. I honestly do not care because when I put the trade on, I accepted the risk and I don't worry about it beyond that. I want all of us to get to that mindset because it's so very important. If you're stressing about one losing trade in your portfolio, it can cause you to have cognitive bias on other potential trades that you had a plan for. So you cannot let one trade that is losing affect all of your trades going forward. If you accept the risk when you put on the trade and you genuinely accepted that risk, then you can be at peace with the outcome of the trade. How do we overcome cognitive biases? Well, first off, overconfidence, believing you know more than you do. Loss aversion, fear of losses outweighing the potential for gains. Confirmation bias, we all, most, I'm not going to say all, most people do this. What does it mean? Seeking information that confirms your existing beliefs, right? So you might go to other time frame charts to find whatever indicators or levels you use when a trade is looking like it's going to be a loser. You might go out and try to find a different indicator telling you, no, it's okay, stay in this trade. Or you might seek the advice of another trader regarding your trade, telling you, oh, yeah, yeah, I can see that this, or that is coming together and we should see a bounce if you're in the trade to the upside. If you go out seeking information to confirm your belief that the trade is going to work, that's called confirmation bias. If you find yourself struggling with your trades, reflect on which one of these biases are affecting your trading and then work to correct them. What do? I listen to Mark Douglas a lot, a lot, to ground myself back to the zone. If I am getting in my own head and I am having some sort of cognitive bias cloud my trading, I know first thing I'm going to do, go listen to Mark Douglas audio book. There's YouTube videos out there. They're getting harder because of copyrights, but you can find them. I listen to Mark Douglas. Some other things that I do. I To relax, to free myself of stress, I like to go for a jog or maybe a walk. I like to meditate, just sit in the quiet, play some instrumental music, and just relax. Whatever it is that helps you to relieve stress, I encourage you to do that when you start to feel stressed out. Okay? Get up, walk away from the screen, right? Because you were okay with your risk when you put on the trade, or you should have been. I promise, sitting in front of the screen and watching every tick is not going to make a difference. So if you feel yourself becoming stressed out over your trades, take a break. Go outside, get some sunshine, right? Do whatever it is necessary to get back to the zone where you are calm, cool, and collected. Some key concepts: emotional discipline, controlling the emotions, and sticking to the plan. I've already talked about cognitive bias. Decision making, how stress and anxiety affects your trading choices. After you have gotten a handle on how to control stress, how to control the cognitive biases, another thing that I encourage you to do is to find a proven and consistent trading strategy that you can learn to trade on your own. Okay? Not just by taking alerts from other traders, but what I'm encouraging you to do is truly learn the trading strategy that your favorite mentor is trading. Truly learn that strategy. Then go on your own, implement what you've learned to find trades, trade setups, and then take your own trades after you have learned the trading strategy, because that will build your confidence in the trading strategy, and it allows you, as you build confidence in yourself, not just your mentor, but in yourself, as you build that confidence, it's going to lead to more consistent, disciplined, and profitable trading. Okay? So find a strategy and a teacher that you can duplicate. I talked about a lot about sticking to a trading plan. Once you've found a consistent trading strategy, now it's time to create a trade plan for your trades. Trade plans must have before you get into the trade. A trade plan must have an entry, the price that you will execute the trade at. A trade plan must have targets, the price or prices where you will take some or all profits. And they must have a stop, the price where you are wrong in your bias, right? For me, I'm a supply and demand trader. So we go long in demand and we go short in supply. So if price is in demand, my bias is bullish. All right. But I must have a stop price where that tells me, in my case, it would be the bottom of a demand zone that tells me I'm wrong. My bias was wrong, and I will exit the trade for a loss. For example, the SOXL trade that I just spoke of. If price closes below my stop today, then I was wrong in my bullish bias, right? We hadn't hit the low, and I'm wrong. I'll exit the trade for a loss. And it doesn't affect me going forward. It is what it is, right? I'm not going to win 100% of my trades. You're not going to win 100% of your trades. The mentor that you look up to more than anyone, right? They are not going to hit 100% of their trades. Warren Buffett doesn't hit 100% of his trades. No one does. Okay? It's okay to take losses. Now, having a great trading plan is very important, but it is even more important that you stick to your plan. If you're not sticking to the plan, then odds are you are either not okay with the risk or you're having one or more cognitive biases. This can go either if you're in a losing trade and your plan was to stop out and you don't stop out, that's not sticking to your plan. It can also go the other way, right? You have your plan, you know where your targets are, but you get scared because see, oh, look, I'm making money on this trade. Oh, I'm gonna go ahead and exit here. I know that my first target is still a ways away, but I don't want to lose this money that I've already made. Boom, you exit. That's not sticking to your plan. So it can go both ways, both for your losses and your profits. If you have a plan, I encourage you to stick to your plan. Now, some things might change, right? You got in at a time where your first trim level or your first target was at, let's say, $50, but the market has turned bearish on you, and now you need to adjust that first target because price has fallen further than when you got in, and you need to adjust that first target to a lower level. That's okay, as long as you have decided that, right? You adjusted your trade plan ahead of time. Everybody understand what I'm saying there? It's okay to adjust your trade plan if the market conditions are changing, as long as you're doing that adjustment to your plan ahead of time and it's not based on a bias or a cognitive bias or fear or exuberance. Rather, it is based on technical analysis of the stock market. All right. This is where journaling comes in. Journaling is something I have done every single trade I take. I journal that trade. Okay. I've been doing this for over 2.5 years. I have a huge, huge journal of trades that I take, that I've taken over 2.5 years. I want you to make it a habit to journal your trades. You must be honest with yourself, right? You're the only one reading your trade journals most of the time, I assume. You must be honest with yourself and ask yourself if you stuck to your plan. And if you didn't, why did you not stick to your plan? Were you fearful? Were you too overconfident and you had an area to take profits, but you were feeling so overconfident that you didn't take your profits there? And then the market turns in the wrong direction and you give up all those profits that you didn't take because you didn't stick to your plan. You see, it's not just fear that causes us to not stick to our plan, it is also overconfidence. All right. So make sure that is part of your journal. And then make sure you identify which cognitive bias it was that caused you to not stick with your plan. And then make yourself a note. Put a sticky note on your desk. If you find yourself doing the same things over and over again, that go against your trading plan, make yourself a note. So put it somewhere that you have to see it every day. All right? And then positive self-talk. This is so, so, so very important, not just in trading, but life in general. But if you're constantly telling yourself in your mind or even out loud the negative things that you're doing, it's going to affect your trading psychology. So if you have been riddled with fear in your trades, rather than saying, I'm so fearful of taking a loss, say, I am confident in my plan and I am confident in my ability to stick to the plan. You got to repeat that to yourself. Heck, put that on a sticky note. Positive self-talk, okay? Super important. If you can learn to create a state of mind that is not affected by the market's behavior, the struggle will cease to exist. If you start each day with a plan, you execute according to your plan. You journal your trades. You do some self evaluation, figuring out what is going on regarding your cognitive biases or your fear or your exuberance and all of that. Then guess what? You will conquer the struggle of trading psychology, keeping you from being a disciplined, confident, and hopefully profitable trader. All right, we got about 5 minutes. I'm going to open it up for questions. If you have a question related to trading psychology and what I've talked about, then will you put that in the chat now, and I will answer a couple of those questions. Casey asks, if your trade in SOXL on a weekly chart, that means you're getting out on a weekly candle close below a demand zone. If, say, next week it chopped back in the demand zone, is it still valid then it did something to your psychology that you lost money, hence not getting right back in? Have you experienced that? Or do you have a rule not to get right back in the same ticker once you got stopped out? That's a great question, Casey. So let's assume I take a loss on SOXL. All right. That means that the weekly demand zone has been broken. Therefore, that weekly demand zone will be lower next week. If it makes my list of swing trades to focus on and price comes down to that lower demand zone, because once a demand zone's broken, Casey, it's removed from my chart, and the next lower demand zone is the one I'm focused on. So if the price comes down to that demand zone and I've chosen to focus and have a trade plan ahead of time to re-enter SOXL, the fact that I had just lost on it the week before would not be a reason for me not to take the trade. Great question. Hannah says, I have many problems staying in trades. Hannah, I don't think you're alone in that. And what I would encourage you to do, Hannah, is have a plan ahead of time, right? So have a plan. Say that you've taken profits but now you don't know, you don't have a plan of how you're going to stay in that trade. Really, that's what it comes down to, right? If you have a plan of how to stay in a winning trade, then you just stick to that plan. Another thing, guys, hindsight's 2020. I encourage you, don't if you exit a trade at a target and that was your target, don't go back and look and say, golly, I could have made 500 extra dollars if I hadn't exited at that target. Don't do that. That's hindsight 2020. And it's going to make you have a cognitive bias the next time that a trade hits target. It's going to make you think, oh gosh, remember when I hit target, I got out according to my plan and it cost me like 500 in profit. Well, this time I'm not going to get out at target. And then it never fails, guys. That's the one. Boom, it goes in the opposite direction and it takes all your profits away. So I encourage you. Hindsight's 2020. Don't go back. If you followed your plan, your trade was a winner. I don't care if the P&L was positive or negative. If you followed your plan, you won because you stayed disciplined. All right? All right. As always, it was great spending this 30 minutes with you on a Friday here in the Essentials Room at Simpler Trading. I hope y'all are encouraged by this. I truly believe that if you can master the psychology behind trading, then you will find that you indeed become more disciplined and more consistently profitable in your trading journey. As always, y'all have an awesome weekend, and I will see you next week.